So what are the top misconceptions, the top 10 misconceptions in the 1031 exchange arena? Well, the first one I'd like to cover is, gosh, I didn't touch the cash. I was at the closing, I found out about a 1031, or I didn't have time to coordinate things in advance, but I know if I don't touch the money, I don't have to pay any tax. That's just not true. If, in fact, the closing has already occurred, even if the funds have not been dispersed to us, and you have not had a company like ours, a qualified intermediary involved, you have a failed transaction. Misunderstanding number two, you're selling a property that's in you and your wife's name, and you would like to buy the replacement property in a two-member LLC that both of you are the only members of. That doesn't work either, because we have something called the same taxpayer rule. Whoever the seller of the relinquished property is must be the buyer of the replacement property. A two-member LLC is a separate taxable entity. Misunderstanding number three, exchanging is only for the 1%. Absolutely not true. The average exchange nationally is about $300,000. There are many people out there who own a rental property or have received a piece of property through a will disposition. That's the most common exchange. That makes up well over 50% of the exchanges done nationally. The fourth misconception is, look, I've tried to find a replacement property. I have two possibilities. I know I can identify a third. My dad owns a property. I think I'm just going to put that down. And as it turns out, that's the property you end up wanting to buy. That's a problem, because you cannot buy replacement property from a related party. There are two unusual exceptions, and you can go through our video library to find out what those are. Misunderstanding number five. I'm selling my relinquished property. I've been giving an earnest money check. Of course I can't deposit the check because I can't touch the money, right? Not true. It's earnest money. You can deposit it. Just make sure and refund it to the closing. Misunderstanding number six. I've got a property that I bought at the beach about 10 years ago. I rented it out for a couple years, but now our family has just been using it personally for 5 or 6 years. Personal use vacation homes that are not rented out do not qualify for 1031, so you need rental activity. Misunderstanding number seven. At the relinquished sale, I generated a certain amount of cash, and I spent all that cash on my replacement acquisition. Therefore, I've deferred all the gain, right? Absolutely wrong. If there was any debt payoff, any loan that was paid off at that relinquished sale, then you have taxes to pay. Misunderstanding number eight. You know, I sold land. I'd really like to buy a rental property, but I know this is called a like-kind exchange. Therefore, I have to buy other land. That's not true. Any kind of investment real estate is like-kind with any other type of investment real estate. There are 3 disqualified uses, and we do have a video clip that covers that. Misunderstanding number 9. You know, I bought a property, and then out of the blue somebody came along and made me an offer I really can't refuse. It's a huge amount of gain, and I really want to sell the property. It's a perfect price, but I've only owned it for 10 months. Don't I have to own it for a full year before I sell it? The answer is no. There is no minimum time holding period before you do a 1031 exchange. The last, number 10, you know, I found a really good replacement property, but my relinquished property hasn't closed yet. I don't think I can write a contract on this property before the closing takes place, right? No, that's not true. No worries at all. No problems in writing replacement property contracts prior to your relinquished closing. I hope you find this helpful. At Atlanta Deferred Exchange, we help you maximize the benefit of your exchange transactions.